Most people underestimate how much consistency matters, not in a motivational way, but in a mechanical way. The system rewards people who keep showing up even when nothing feels like it's working. That's true in games, and it's true with money. The difference is that in games, progress bars move. With investing, nothing moves for a long time, so people assume they're wasting their time. This is where the Roth IRA quietly does its job. It removes decision fatigue. Once the money is in and invested, there's nothing to tweak. No constant selling, no panic moves, no chasing the next thing. You're not trying to win every day, or you're letting time win for you. A lot of financial stress comes from feeling like you always need to be doing something. Buying, selling, switching strategies, watching charts, reading takes. That stress leads to bad decisions. The Roth IRA forces stillness. Another thing that doesn't get talked about enough is how forgiving the Roth IRA actually is. Contributions can be pulled out at any time without penalty. That doesn't mean you should plan to do that, but it matters psychologically. It means the money isn't completely trapped. It's not a prison sentence. It's a long-term tool with flexibility built in. Earnings are different. Gains are meant to stay put until certain conditions are met. That's the deal. The reward for waiting is that when the time comes, those withdrawals are tax-free, no mental math, no stress about what you owe, no surprise bills. That clarity matters more than people think. A lot of people avoid investing because they're afraid of making a mistake they can't undo. The Roth IRA lowers that fear. Another common mistake is overestimating how complex investing needs to be. You don't need to know every company. You don't need to predict the future. You don't need to react to every headline. Broad market exposure already captures growth. It already adjusts. It already reflects innovation over time. Trying to be smarter than the market usually just means being more emotional than the market. There's a reason simple index strategies outperform most active traders over long periods. It's not because they're exciting. It's because they remove human error. And that's really the theme here, removing friction, removing mistakes, removing emotion. The Roth IRA doesn't make you disciplined. It rewards discipline if you have it, and if you don't, it forces you to slow down. This is why it's especially useful for people who feel behind, people who feel like they missed something, people who didn't get a head start, people who spent their early years grinding games, jobs, side hustles, or just trying to survive. You don't need to catch up all at once. You just need to stop bleeding time. The earlier you start, the more unfair the advantage becomes later. Not because you're smarter, but because compounding is ruthless in your favor once it gets going. And here's the part that nobody likes to hear. The boring phase lasts years. Not months, years. There's no way around that. If that makes you uncomfortable, that's normal. Most people quit during that phase, but if you can tolerate boredom longer than most people, you end up somewhere most people never reach. Another thing that keeps people stuck is comparison. You see people your age online claiming wins, exits, passive income, or figuring it out early. Most of that content is either exaggerated, selective, or outright fake. But even when it's real, comparison still poisons decision making. It pushes people toward risk instead of systems. The Roth IRA doesn't care what anyone else is doing. It doesn't reward speed. It doesn't reward hype. It rewards time and consistency. There's also this idea that investing has to feel productive every week. Like if you're not actively doing something, you're falling behind. In reality, the most productive thing most of the time is doing nothing, letting compounding run, letting reinvestment happen automatically, letting markets fluctuate without reacting. That's hard for people who grew up with constant input, constant updates, constant engagement. Silence feels like failure. But silence is where the Roth IRA works best. Another misunderstood part is risk. People hear stock market and assume gambling. The reality is that broad market investing over long periods has historically been one of the most reliable wealth building mechanisms available to normal people. Not risk-free, but predictable over time. The biggest risk isn't market crashes, it's behavior, panic selling, overtrading. The Roth IRA doesn't remove market risk, but it removes a lot of behavioral risk. It creates distance between emotion and action. This is why it fits people who struggle with impulse, people who overthink, people who feel like they need to act. The structure itself does part of the discipline for you. Another important point is identity. A lot of people avoid investing because they don't see themselves as finance people. They think money is for someone else, someone smarter, someone richer, someone more put together. The Roth IRA doesn't care who you are. It doesn't ask for credentials. It doesn't ask for confidence. It just sits there and compounds if you let it. You don't need to be good at money. This is also why starting small matters. Small contributions build trust. You see that nothing breaks, nothing collapses. Over time, that trust turns into consistency, and consistency turns into momentum. Momentum in investing isn't visible early. It doesn't feel like momentum, right? It feels like stagnation. But under the surface, math is working. There's also a psychological shift that happens once you commit to something long term. When you know a portion of your money is locked into a system designed for decades, it changes how you think about everything else. Short-term noise matters less. Impulses calm down. You stop feeling like every decision has to be perfect. That matters when life is unstable, jobs change, income fluctuates, motivation comes and goes. The Roth IRA doesn't care. It keeps doing the same thing through all of it. Another thing people misunderstand is that wealth isn't just about how much you earn. It's about how much you keep and how long you keep it working. Everything leaks out through taxes, bad decisions, or constant resets. The Roth IRA plugs some of those leaks, not all of them, but enough to make a real difference. This is also why it's not meant to be exciting. Excitement leads to interference. The best investing systems are boring on purpose. They're designed to be ignored. If you're someone who feels like they overthink everything, this is a feature, not a flaw. The less you touch it, the better it works. There's a point years down the line where things start to feel different. The numbers finally move. The account starts to feel real. That's when most people realize how powerful time actually is. But that point only exists if you didn't quit earlier. That's not because they're incapable. It's because nothing told them to expect boredom. Nothing warned them that progress would be invisible for a long time. The Roth IRA doesn't solve motivation. If you're willing to build something quietly while everyone else is chasing shortcuts, you give yourself options later, not guarantees. Options. And that's the real value. Not money for the sake of money, but freedom from constant pressure. That's why this matters. And here's the part that usually lands the hardest once you really sit with it. Most people don't actually fail financially because they made one terrible decision. They fail because they made dozens of small emotional decisions over time. They reacted, they chased, they stopped and restarted. They let frustration dictate strategy. The Roth IRA is boring enough to interrupt that pattern. When money is set aside into a system you don't constantly interact with, you stop asking it to perform for you emotionally. It's not there to make you feel smart. It's not there to give you dopamine. It's there to work in the background while you live your life. That separation is powerful. A lot of people who grew up gaming understand this instinctively, even if they've never applied it to money. You don't expect a character to be maxed out after one session. You understand that builds take time. You understand that early progress feels slow and unrewarding. You understand delayed payoff. The mistake is thinking real life is different. It's not. The systems are just quieter. Another reason the Roth IRA works so well is that it removes the need to be right. You don't have to predict which company wins. You don't have to time entries and exits. You don't have to read charts or follow influencers. You just need exposure to long-term growth. Most people overestimate their ability to predict and underestimate the cost of being wrong. The Roth IRA sidesteps that entirely. It also removes the pressure to make it all back after a mistake. There's no revenge trading, no doubling down, no emotional spiral. You contribute, you invest, you wait. You're more likely to take risks you don't need to take. You try to compress time. You look for leverage. You look for shortcuts. The Roth IRA forces you to accept time instead of fight it. That doesn't mean you can't pursue other things. It just means your foundation isn't dependent on them working out. You're not betting your future on one idea. Over time, that changes how you show up. You're less desperate, less reactive, more grounded. That's something money advice rarely talks about. Not returns, but mental load. There's nothing to say day to day. It just works. And years later, when most people are still trying to figure out what went wrong, the ones who stayed consistent aren't confused. They didn't do anything special. They just didn't quit. At some point, the conversation around money has to shift away from excitement and toward ownership. Ownership of decisions, ownership of time, ownership of patience. That's what most people never fully step into. They want outcomes without committing to the process that creates them. The Roth IRA is one of the few tools that quietly forces that commitment. It doesn't ask you to be motivated every day. It doesn't care if you're inspired. It doesn't reward cleverness. It just sits there waiting for consistency. That's uncomfortable for people who rely on bursts of energy or emotion to get things done. But that discomfort is the filter. Most people live in cycles. They get excited, start something, lose interest, stop, then feel guilty and start again. Financially, that cycle is brutal. It resets progress over and over. The Roth IRA breaks that loop if you let it. It replaces cycles with a straight line. Another thing that's hard to accept is that the Roth IRA doesn't care about your story. It doesn't care if you had a rough start. It doesn't care if you feel late. It doesn't care if you feel unlucky. It treats every dollar the same once it's inside. That can feel cold, but it's also fair. It means your past doesn't disqualify you. It means starting later. It means progress is always possible. People underestimate how powerful it is to have something in their life that's predictable, something that doesn't change based on mood, news, or trends. The Roth IRA is predictable. Contribute, invest, wait. That's the loop. Over time, that predictability creates stability, and stability creates better decisions elsewhere. When you're not panicking about the future, you stop making short-term choices that hurt you long-term. Not chasing wins, but building systems. Not trying to feel rich, but trying to be secure. If you can accept that, if you can tolerate the quiet, if you can keep contributing, even when it feels pointless, you're already doing better than most people. Not because you're smarter, but because you're willing to wait. Not intelligence, not talent, time and consistency. The Roth IRA is just a vehicle for that idea. If this helped put things into perspective, if you're trying to get your finances under control without hype or shortcuts, consider subscribing. And if you're early, late, or somewhere in between, comment where you're at. I'll see you guys later.